Hey, we're all set? Okay, we're ready. Let's get started. All right, let's begin. Okay, just wanted to take a look at our economic data to get started, and then we'll begin. Um, today's Monday, of course, so let me roll back a little bit here. We've already had quite a bit of data come out, but nothing too earth-shattering. You know, like consumer prices were slightly higher in the Eurozone. And I think, we're beginning to see signs of inflation. That's good. But that's the only thing of any importance that we've seen so far come out today. Everybody's looking ahead to later this week. We have two things, and one thing that you're not seeing on here. Oh, by the way, so for later today, before I get to that, Carney's speech coming up in 2 hours. If you're trading Canadian dollar, this is definitely a big deal. I'm sorry. Carney's Canadian, but if he's the head of the Bank of England now, he used to be the head of the Bank of Canada. How strange is that? So if you're trading British pound, keep an eye on this. Now, don't be surprised if Carney tries to knock the British pound down after all of the excitement of the past few days. Don't be surprised if he tries to knock it down. It could be a buying opportunity, right? He could try to push it down a little bit. Don't be surprised if he says the pound has gotten ahead of itself. It could be a chance to short the pound going into the speech, and it could be a chance to buy it after the speech. This is all happening less than 2 hours from now. That's how I'm looking at Carney's speech. I wouldn't be surprised if he tries to cool the pound off, because the pound has been the hottest currency out there for the past week or so. That's coming up shortly. And that's really the only thing I would be concerned about coming up for the rest of the day. Tonight, you have the Reserve Bank of Australia's minutes. If you're trading Australian dollar, that's definitely a big deal. That's a market mover. The meeting minutes of the most recent meeting from the RBA, right? And that could move the Aussie dollar, which has been very active lately. He had a really strong jobs report last week from the Reserve Bank of Australia. They were looking for 17,000 jobs. They created 54,000 jobs instead. I'd be willing to bet that a lot of those jobs are mining jobs, because iron ore had gone up quite a bit, copper quite a bit higher, gold quite a bit higher, right? Copper in particular, above $3 a pound now, well above $3 a pound. So probably a lot of mining jobs are being created in Australia. ZEW coming out tomorrow morning. That tends to be a market mover. German ZEW index coming out early tomorrow. Tomorrow also, President Trump will be speaking in front of the UN. That could be interesting to say the least. Who knows what's going to happen, right? So I think the markets will be watching that one closely. By the way, we know that President Trump does tend to tweet quite a bit. A study showed that they believe Trump's value to Twitter, the stock Twitter, was $2 billion. And that without Trump, if Trump were to leave Twitter, Twitter would probably lose 25% of its value, like overnight. Like if Trump were to quit Twitter overnight, Twitter would probably lose 25% of its value. If Trump were to start tweeting or on an alternative platform, he could take Twitter out. Because think about it. Let's say Twitter Trump quits Twitter tonight and starts using an alternative platform. Like there's a lot of platforms out there that you and I have probably never heard of, but they're just like Twitter, right? So if Trump starts using this other platform, that means everybody else has to start using it too, because they have to hear what he's saying. right? They have to see his messages. I would call them tweets, but if he's not on Twitter, they're not tweets, right? So Trump could wreck this stock, and he knows it. How do I know that he knows it? Because over the weekend, he retweeted the study that says, Trump retweeted the study that says that Trump is worth $2 billion to Twitter. So it's kind of interesting, isn't it? This stock would lose 25% of its value without Trump, and now Trump knows it. So I think that probably increases the odds that he leaves Twitter at some point. Don't you think? Anyway, he speaks tomorrow at the UN. Trump is our golden bird, says Zafir Shah. I don't know, man. I mean, let's put it this way. Never a dull moment, right? All right. Let's go. And so so we get Trump at the UN tomorrow. We get the Fed on Wednesday. And in between, we're going to get ZEW index from Germany, Reserve Bank of Australia meeting minutes. We're going to get retail sales out of Great Britain on Wednesday morning. And so all of these are potential market movers. A lot of stuff coming up. Oh my goodness. And then the Fed meeting on Wednesday for the icing on the cake. I would expect, things will probably get quite quiet on Wednesday afternoon leading up to that Fed meeting, and then things could get pretty wild on Wednesday afternoon as that Fed meeting approaches. Carlos asks, should we say goodbye to market correlation and embrace market reacting only to the Fed, ECB, BOE announcements? Well, it hasn't. Okay, it's a good question. The market has market correlation been completely disrupted? No. But something has changed. And here's what I believe it is. The market doesn't react to economic data quite the same way that it used to. The market used to purely react to data because in his wisdom, Alan Greenspan was very opaque about Fed intentions. I'm going back pre-Bernanke, so before 2005. Before 2005, we had Alan Greenspan in the Fed, and Greenspan was very opaque. You didn't know what he was thinking. He never let you know what he was thinking. And because you never knew what the Fed was thinking, the market would simply react to the number, to the economic number. So if a housing number was strong, the dollar would go up, and if the housing number was weak, the dollar would go down. Then came Bernanke and this era, and followed by Yellen and this era of transparency. And that's when we began to understand just how smart Alan Greenspan was. You see, everyone was very frustrated with Greenspan, and he's so opaque, and why doesn't he just say what he means, right? We would literally grow angry listening to him speak, saying, just say what you mean. Just say what you mean. And now we can't get these people to shut up. And the intelligence of Greenspan was keep the Fed out of the market and because if you are constantly injecting your thoughts into the markets are not freely reacting to data. Now, instead of reacting to data, the markets react to how it perceives the Fed will react to the data. Instead of reacting to data, so let's say a big GDP number comes out. Instead of reacting to the GDP number, the market now reacts to how the Fed is going to react to the GDP number. And that's why it makes less and less sense. I don't think they've killed correlation completely, but they've certainly destroyed the reactions to data, which used to be much more tradable, right? It used to be that you could just trade news and do nothing but trade news. Now with all this so-called transparency, they've destroyed that because they've injected the market into everything. They've injected their opinions, into everything. And what it does is it disrupts the market. Bernanke pioneered the screaming, this constant blah, blah, blah. And then Yellen amplified it with, okay, now we have to know what every thought that's on everyone's mind at every moment. We have to know every single person that's on the FOMC, we have to know what they had for breakfast every day. We have to know what everyone's thinking at every moment. And, really, they would just be, we'd all be better off if everyone would just shut up and just let the market play out. But that type of intelligence just doesn't exist anymore. It's been educated out of people. And so we're stuck with this constant yammering that never goes away. So that's why you get, these days where, okay, today we're going to hear from 6 different Fed people. You never used to have that. Yeah, and it all started with Bernanke. He ushered in this age of transparency, which is a nightmare. And I say, right, our main hope is Yellen is gone soon, right? Yellen is leaving, I think next year her term is up. You've got to put somebody new in charge of the Fed who has common sense and maybe who has worked in the private sector. I think you can no longer, one of the things we've learned is you can no longer appoint people who have not worked in the private sector, right? For crying out loud, somebody who's run a hot dog stand. You can't run the Fed unless you've run at least a hot dog stand. How's that? Okay, let's get back to the charts. Okay, so Euro USD we looked at earlier, right? Euro is climbing tentatively. But let's look at dollar Canada. Dollar Canada, it's interesting to me, right? Oil is starting to gather strength. Canadian dollar gained a lot of strength here. And I'm gonna get rid of this moving average for a moment here. And now it's sort of coming the other way, but we're seeing oil is gaining a bit. I'm going to make this a weekly chart. This is what we call a, there's a lot of support right here, by the way. So I think this little bounce that you're getting is from support, but look at is it a strong bounce? It's not a strong bounce. It's kind of a weak bounce. And it's also what I would consider, whoops. I would consider this a bear flag. In other words, we've gotten our bounce. This is our bounce. This is it, gang. For dollar Canada, this is your big bounce. So the psychology behind this move is, here, let me format this. We can get rid of those percentages. The bears are in charge. Look at the big red candle, tells you the bears are in charge. That's your flagpole. Then comes your flag. The bulls try to reply, but they don't really have much of a reply. Now, if you turn that upside down, that's your flagpole, that's your flag. The bulls are in charge. The bears are replying, and then the bears are in charge. The bulls have very little to say in reply. The bears are going to win this, and the bears are probably going to knock this down to 120. They're going to break this support, or at least they're going to push it down to these wicks. This is going to 120. Okay, so they're pushing this back up to 122. Why am I saying 120? Because I'm measuring this. This starts at about 124 to 122. It's about a 200 pip candle, right? And then this comes up to 122. So you add another 200 down from here, from the 122. It should come down to 120. It's going to 120, $CAD, right? And now you've got oil joining in, right? You've had gold has been going up, silver's been going up, copper, right? All of these things have been going up, and Canada, all of these things are being mined in Canada. They're being mined in the US too, but they're a bigger part of Canada's economy, okay? And now you've got oil joining in, and oil is, of course, the U.S., this is a U.S.-Canada currency pair. But the difference is, yeah, the U.S. drills for oil, so does Canada. But the U.S. is a net importer, Canada's a net exporter. So the price of oil going up is beneficial to Canada, not to the U.S. in terms of the currency. So Canada's going to win. Canada's going to win this little battle. And I think it's going to 120. So it's a short. 10 EMA's been working on the weekly. Interesting. I haven't checked it on the weekly on this one, but that wouldn't surprise me a bit. Let me pull that up. That's another thing you should be checking if you're using this type of strategy. It can be applied to the weekly as well. Here you can see once, twice, 3 times, right? It has been working on the weekly. I didn't even notice this. 10s and 20s, daily and weekly, right? So that opens a lot of possibilities. If you're looking at 10s and 20s, daily and weekly, a lot of possibilities there, right? Awful lot of possibilities. So, okay. Anyway, yeah, so to sell short. Now listen. There's 2 different. In either case, we're looking to sell short. If we're looking to sell short on the 10-week moving average, then you're looking to sell short near 124. Of course, it might not get there. Using the bear flag can sell short when this breaks. When this breaks this line right here, and that would be selling short. According to this, right now, it would be selling short at 120, 140. So whether it goes up or down, you're still selling short, right? If it goes up to 124, you're selling short. If it goes down to 121.40, you're still selling short. Based on the bear flag, you could also just sell short here with your stop above this line. And that's another way you could play the bear flag. Target 120, sell short 122. Stop is above 122.70. That's approximately 3 to 1, right? Because you're talking 200 pip profit, 70 pip stop. That's about 3 to 1, right? And of course, if that fails, then you just wait for the 10-day moving average to kick in. Hope that it rises up to that 10-day moving average and sell short there. I'm sorry, not 10-day, 10-week moving average and sell short there. Fantastic. So if the 10-day is not working, look at the weekly. Right. And that clearly is working here. Fantastic. All right. Thanks for pointing that out, Carlos. Appreciate that. That's one thing about this strategy. When it starts working, it's funny. Like, you'll look at charts and you'll go through stretches where, gosh, it's like you just can't find it working anywhere. And then you'll go through other stretches where it's working everywhere. But one of the problems is, like right now, dollar is really weak, right? And we can't simply load up every trade where it's short the dollar, short the dollar, short the dollar. So we got to be careful about that too. But certainly those trades have been working. Ed, is there any support on gold at 1312? Let's take a look at that. And thanks for the questions. Keep them coming. That's what this room's for everybody. That's why we're here. Great call on Canada, though, for Carlos. Let's take a look at gold. While we still have a little bit of time here, we're down to less than 10 minutes on this. Now, you can see from a previous session that I drew a support level, a big time support level in on the weekly and it looks like that's right at 113. Now that's at the weekly. We haven't gone daily yet. But at the weekly you can see how the prices would hit and fall, and that's right at 113. And then you've got the 10-week moving average right just below that, right at 113 also. So 1300 is huge support right now. Now let's drill down to the daily. But we know weekly support 1300 is a big number. And doesn't this have the look of something that got ahead of itself? It just popped off here, gapped up, and now we see the gap being filled here and coming down. Now let's get lower here. Whoop. Let's get to the daily. The daily time frame. You can see things drifting down. Now 1312 is where? Right here. Now I'm going to look back first. I'm going to say 1312 was an area of resistance back almost a year ago, and support way back to last year. Does everybody see this? $13.12 is a number of some significance. Support on several occasions in 2016 and resistance also. So yes, 1312 area has acted as support and resistance in the not too distant past. Now, whether or not that's going to hold now, I don't know. But here you can see the price is right in that general area right now. So maybe that will hold. But you're correct. There is some support there going back a year. And you can see even more recently in this area, right? Going back to maybe late August, early September, price had some trouble here getting through. You can see the dojis telling you, hey, it's having trouble getting through. Let's go to the shorter term chart. We're talking about 60-minute now. Let's go shorter. So we're taking the long term and then working down to the shorter term. I mean, this whole area, like you can see back here, late August, like the whole area really from 113 up to 113.12. It's just it's like a whole area where there was the price came down and then popped out of there. And now we're coming back down into that area. I don't consider this to be major. Okay, but that doesn't matter. This 113.12 area was a major deal, and this 113.00 area was a major deal, because you can see those on the daily, right? Now, anything that you can see on the longer term charts also exists on the shorter term charts. And there was some activity here. This doji is right at 113.12. This one's a little bit lower. And that might be what you're referring to as that 113.06. That doji is actually I'm showing it at 13.08. I keep saying 113. 13.08 is that doji right here. 13.12, 13.08. So this is an area where the price did come down and then found some buyers above 1300. So this whole area above 1300, sorry about that, that's the opening bell, the New York Stock Exchange. This whole area above 1300, there is some kind of shorter term support in here. They did find buyers above 1300 here. But I don't consider it major. The major support is 1300. So that's what I would focus. But yeah, you definitely have some good levels in there. You definitely have some good levels in there. Very nice, very nice. Pretty awesome, actually. So we've pulled back a little bit on gold. How about the pullback in Bitcoin, which under 3,000 last I heard. After almost touching 5,000, we get under 3,000. So Bitcoin really taking a wild round trip after a big crackdown in China and maybe in the US too. So we'll see how that shapes out. All right, how are they opening up in the US? We'll take a quick peek at US stocks, because a lot of time they can call the tune. There's that same resistance that you saw on gold looks to be visible on the S&P 500. But we gapped higher and we are above 2,500. We closed at 2,500 on Friday for the first time ever on the S&P 500. So welcome to all-time highs in the stock market once again. 2,500 on the stocks. And there we go. Right, all-time high territory. Anybody who's short is probably losing money. you know, if you're short the indexes. Probably losing. You know, it's such a strange situation, right? But I think the market's kind of saying, yeah, buy the dips in the indexes has worked. And I think the market's saying, look, if we can get lower tax rates in the US, that's going to drive business. It's going to drive profitability. It's going to make, you know, it's going to increase GDP. And, you know, it's good news, you know, for because 35% tax rate is awfully high. All right. Highest in the world, right? Right now, it didn't used to be. What happened was the U.S. had a 35 tax rate, and a lot of other countries had high tax rates too. What happened? The other countries lowered their rates. The U.S. stayed put at 35%. And next thing you know, eventually, we ended up with one of the highest rates in the world. So in order to become competitive again, we're going to have to cut our rates. And that's what this is all about. So I think the market, by hitting all-time highs, the market is saying, maybe, just maybe, this is going to get done. We shall see. Okay, gang, that's going to do it for me for today. Very nice talking to you folks. Come on back tomorrow. Let's do it again. I love answering your questions and looking at charts with you and analyzing the markets in real time. And let's do it again tomorrow, same time. I'll see you then. Take care.